King River Copper is very fortunate at the moment to own 100% of one of the world's largest JORC resources of vanadium. A recent high-grade gold discovery and the optimistic outlook for vanadium metals has propelled King River to new fortunes over the last 6 months. Our share price has gone from 0.4% in October of last year to something like 10 cents today on very large volumes. In 2012, under a different name, Speewah Metals, King River undertook a scoping study which looked at our large 4.7 billion tonne JORC resource. That scoping study was delivered in the middle of the GFC. It was delivered at a time when the Australian dollar was quite strong. Vanadium sentiment was quite sick because another vanadium group in Australia called Atlantic had gone broke, and our own share price had languished quite a bit. So we decided to shelve the project and wait for a more optimistic market outlook, or perhaps a breakthrough in some new technologies. That earlier scoping work, though, was very useful in many respects because it outlined some of the key parameters that would be required for a large-scale project in this northern Australian area called the Kimberley. This map, so I'll just learn with the pointer. So we're in this part of Australia. This is our project here. The nearest town is Kununurra. We've got a port over here, Wyndham, and approximately 50, 60 kilometres to the east, we've got the Argyle Diamond Mine. Now, the most important thing to appreciate here is Argyle have already flagged an intention to wind down. It's been one of the world's most successful diamond mines. There's a great deal of infrastructure in the area, which obviously is not going to be required anymore. There's a large Ord River hydro scheme. You've got the port of Wyndham, which is very underutilised, and the township of Kununurra has got a lot of people, a lot of services, which are able to help mining industry. This is an interesting chart about King River. It's obviously a chart that our competitors in the space hate because they normally leave us off their charts when they're doing peer group comparisons. The three key things to look at, obviously the blue is the size of our JORC resources. The red down the bottom here is the grade in the ground, and this green one is the grade of our concentrate, which is obviously the most important. The size of our JORC resource is obviously self-explanatory. The grade of the concentrate, that's very fundamental to the economics of an acid leach process. Obviously, the higher the grade of the concentrate, the less acid that's required and the smaller plant that's required to produce the same volume of metals. In our case, you'll see that our concentrate is typically 30 to 40% higher than the other groups. The other interesting thing about this is on the grade side of things. Yes, we've got a low grade, but please appreciate that we'll be producing 3 high purity products. This is only including our vanadium grade. It's ignoring the titanium and the iron grades that we get in our concentrates. And the other thing which it ignores is the fact that we've got an ore body which is flat-lying at the surface. And when I say flat-lying at the surface, I'm talking about something which dips at between 5 and 15 degrees. So you've got a situation where I think if you're going to compare apples with apples, you've also got to look at the waste to ore strip ratios of when you're mining things. So if someone's got an ore body which is, say, dipping at 45 to 60 degrees, they might have a waste to ore ratio of 4 to 1, which means that you mine 5 tonnes of material, 4 tonnes of its waste, 1 tonne of its ore. In these flat-lying ore bodies, you can have radically different waste to ore ratios. Could be anything like 0.5 to 1. So mine 1.5 tonnes of ore, perhaps only half a tonne of it is going to be waste. This is the location of the vanadium resources. This is the central deposit that we will be tackling first up with the scoping work that we're doing. That's the JORC resource, obviously. This is the central zone. As you can see there, that's 520 million tonnes at 0.36. That previous chart was showing our global JORC resource of 0.3. What's changed since 2012 when we did the previous scoping work? Obviously, the most obvious change has been the commodity price. I think the outlook for it is still quite positive. The price has gone up for a number of reasons. We've touched on the battery side of things, but also the fact that China is using more vanadium now in the rebar to make it stronger. The other things which have changed for King River are our concentrate specifications. In the last month, we announced that we've materially improved our concentrate. We've been able to grind it at a much coarser grind. So previously, the test work was done at 45 micron. It's now based on a 120 micron grind size. We've improved our mass recoveries by 16.58%. And we've been able to eliminate a lot more of the waste, which is the 67% of the waste. So we've got a much more attractive concentrate now that we're working on with the current scoping study than the previous one. We're obviously going to be applying a hydrometallurgical process in this scoping study. We're not going to be using the solvent extraction technologies that we used in the previous scoping work. And we're very much targeting the highest purity we can get in those metals. And we've made it very clear that we're targeting 99.5% or better purities of vanadium, titanium, and a near pure iron oxide. This just basically outlines pretty simply what the flow sheet is. So we're looking at a situation where it'd be an open cut project. We'd mine it, we'd crush it, we'd grind it. That material would go under magnets. The magnets would suck up the metal, and we'd produce a concentrate. That concentrate would then be dissolved in a hydrochloric acid. That would be done at atmospheric temperatures of between 70 and 90 degrees. I think the term that would be left in the acid is something like 3 to 4 hours. And then what happens is that we use a hydrothermal method to precipitate out of that pregnant liquor the titanium. Then would use other chemical precipitation methods to drop out the vanadium and the iron. During that process, we'd be looking to recover as large a proportion as possible of our acid, because acid is clearly a big cost factor in these sorts of projects. These are important factors which differentiate the company to others. I think I've touched on a few of those things. That's just an update on where we're at with the concept study. This is a bit of a corporate overview. I think the main points to draw your attention to, we've got $1.5 million in the bank, but we have partially underwritten an options issue which is expiring on June the 30th. So we've got another minimum of $6 million coming in from that exercise. If the shares are above 10, it could be as much as $18 million. We've also got a very widely spread register. I'm the only shareholder that owns more than 5%. The company, as I said, has had a pretty wild ride. Seems to be consolidating now. We've also got some gold. I mentioned we made a high-grade gold discovery. Here we intersected 11 metres of 27 grams a tonne gold just prior to Christmas, and we've now pegged all this additional area, and we've been surrounded by other companies, including Fortescue Metals. That's the model, that's the current strategy and the timing. And I think, look, the other point I'd like to make here is that looking at the ASX website, the average daily turnover in our stock for the year has been 19.3 million shares. That means that nearly 10% of the company has been changing hands on a weekly basis for the year. We are clearly viewed by the market as being one of the most attractive trading vehicles for those people interested in playing in the battery sector market, and given what we've got in front of us, I don't see that changing in the foreseeable future. Thank you very much.